Welcome to another episode, Loan with Jenn. Whether you're streaming us on podcast or wherever you listen to audio, or if you're watching us on YouTube, I have a treat for you today. How not to commit mortgage fraud. And I don't mean to shock you, but I do, because mortgage fraud is always rampant. There's always a new way that people are figuring out how to cheat the system. And I'm here to put the kibosh on it. It is, sometimes people don't mean to do it, and they're being led by a bad player that's actually in our industry. So I have a special guest who used to work for a third-party company that consulted the FBI on who to prosecute for 6 years. Jenn Bailey is my dear friend. We are colleagues together at Legacy Mutual Mortgage, where we both are loan officers. And Jenn, we have rehearsed none of this. I have not actually heard your full story. And I said, oh my gosh, we have to create a podcast about this. This is what we need to do. So tell me, when was this? What years was it that you tell us a little bit? Just start talking. I'm going to ask you questions.
It was about 10 years ago, 10 to 15. Goodness gracious. It's been forever. Was
it right after the meltdown?
So I was mostly investigating fraud from the 2008 crash. Yes, like that was a bulk of my reporting was on that, because that's when mortgage fraud was rampant. And that was actually what resulted in the crash, was all the mortgage fraud, over lending to people that couldn't afford it, and then they wouldn't pay their mortgage. There was tons of foreclosures.
So this was kind of the 2012 to 10 to 12 timeframe is when you did this.
Yes. Yep. Yeah. And we would investigate. What's that?
6 years.
Yeah. Yep. And we would go back all the way to 2001 files. So it wasn't just a certain period. They would send us files going all the way back to about 2001. So I was investigating about 10 to 12 years worth of loan reports and loan files to see where the fraud was. And I found fraud, Jenn, in like 90% of the files, which was so mind blowing.
So how do the files get flagged? Like, how do the companies know who to investigate? What are some of the triggers?
Good question. So the first trigger for all my initial reviews was someone that missed a mortgage payment. As soon as they missed a mortgage payment, the PMI company would send us the entire massive loan file and say, here, Jenn, see if you can find any fraud. I have a feeling since they're missing payments, the lender's going to make a PMI claim. See if you can find any fraud in this. And I found fraud in almost all of them.
For those listening that might not know what PMI is, what is PMI?
PMI is private mortgage insurance. If you put less than 20% down on a home, if you have a conventional loan, you have to have private mortgage insurance, or on other loan types like FHA. Private mortgage insurance protects a lender in case you default on your mortgage. If you default on your mortgage, the lender doesn't want to be stuck with a house they now have to sell and a loan they have to pay for. They will make a claim to the PMI company to recoup some of their losses.
Okay, gotcha. So yeah, it's similar to a house insurance where if the house burns down. Yeah, for sure.
Yep.
So yeah, and we'll put in the notes in the description, we'll put a video about kind of PMI and what PMI is. But the bottom line is PMI, if there was PMI, right? Because some loans don't have PMI. But if PMI was in place, let's say, now, could they have missed a mortgage payment? Like, let's say that I was a borrower that I paid on time for 7 years, and then all of a sudden, randomly, I miss a mortgage payment. Is it flagged then too, even after like 7, 8 years?
It can be. So the PMI company, it's up to their discretion and their risk analytics department. So their risk analytics department will look at your loan to value ratio, the amount of equity you have in the home, what your credit scores were when you bought the home. So a lot of times they'll do a simultaneous flag if you missed a payment and the initial loan looks like you barely squeaked by to get into the home. One payment alone is enough to flag the file.
Wow. But am I right that the biggest radar is like the first 6 months of the loan? Because that's usually, if it was fraud, they're not making a payment.
That's the biggest flag. You got it. That, and they also will do random files. So just to make sure they're keeping good quality control on their end, after closing, they'll do post-closing audits where they'll have people like me just go through the original loan file within the past, the next few months after you buy a house, just to see if there's any red flags that they need to be aware of.
Okay. Got you. Well, that's all very interesting. So this company, the FBI would hire an outside company. It's almost like you're a private investigator. So you would get a file, well, back then files were still paper. So you could
Yep.
get this big and you would just have to start digging like,
Yes, I dig through I saw every single piece of paper in the loan file. So that's why I would say that doing loans now is easy and I'm really good at it because I had to understand every single in and out of a loan from beginning to end, every document, pay stubs, W-2s, be able to spot where they're fake, which was pretty easy. Most people didn't take the time to understand how to calculate taxes correctly on fake W-2s, bank statements, all the things, go through identity fraud, liability fraud, occupancy fraud. I'd have to call and interview every party to the transaction. So I'd have to interview the borrowers, the loan officer, because the loan officer was the primary one committing the fraud, the realtors, sometimes the realtors were involved in the fraud, the appraisers, the title company. I mean, I'd have to interview and investigate every single person, record the calls and put it in my report.
oh, wow. Wow. How long would it take you from, like, let's say on average, I know the different files were different, but to go from beginning to end, once you got the flag, like, hey, this needs to be investigated, here's the file, how long would it take?
It would be about most files I could get through in about 4 hours. I got really fast because I just had a system where I would go through and be able to spot it pretty quick. Some files that involved more difficult investment scam situations could take a week because I'd also have to get a hold of all the parties. If it was a lot of fraud, I would find.
So the process is you're going through the file and you start actually contacting the parties during the investigation.
Yep. During the investigation, we would reach out to employers to verify the original verification of employment that was obtained during the transaction to make sure that it's legit. We would go to the banks and the employers and get brand new verifications of employment and verifications of assets to make sure it matches with the loan file. So we'll go back to the exact date so we know exactly what it should have looked like. And those were fraudulent all the time as well, where someone's employer would just fill it out incorrectly to get them the loan.
So I had, and it's interesting. So I've been an originator for a very long time. And so I have to say it's very rare. Like I'm only referred to people by referral. So it's usually a little bit of a filter because someone knows someone and it's from their sphere. Like they're doing business with people that they know. I don't do business with any cold people that I don't know. So the chances are a little bit less. It doesn't mean that it hasn't happened, but I've had the biggest cases that I see. I did have actually one time through the processing, the W-2 and the pay stub were incongruent. They didn't match. And the verification of employment, and the son worked for the dad's company and the dad's accountant was lying. Like when we unraveled it and figured it out, and we hadn't closed yet, thank God, but we started looking for those inconsistencies. And I just said, hey, we're not going to be able to do a loan. There's too much inconsistent. Like they were cold busted. But the dad they were lying for the kids. So that's actually, just for those of you listening, if you are buying from family or selling to family or work for a family owned business, just know there's going to be more questions. Like don't be turned off when the lender is asking you a little bit more deeply questions, because that's actually where a good percent of fraud can happen, because family members are willing to say whatever to get them a loan. Did you find that, Jen? Like what percent would you say were like families or people like that close related were involved?
Yeah, very frequently. So we would call them the non-arm's length transaction fraud. So we would find it all the time where family members would do that, whether they worked for the employer's company or their father's company or parents' company, or they would get a gift from the parents that they actually ended up paying back. So if you say you're going to get a gift and you end up paying the person back and your file is audited, you could be prosecuted for mortgage fraud. That one was pretty common.
Oh, wow. So if it's a gift, it's really a gift, not just like, hey,
yeah,
Mom and Dad deposit money in my account that I'm really going to pay them back the next day, Yeah.
exactly.
So I wanted to talk about So income fraud is a way that there's fraud. There's also fraud of, like you mentioned, assets. So money that you're getting, usually it involves a gift, right? Because if we're showing assets from a liquidation of a bona fide financial institution, it's pretty cut and dry. I mean, the money's there, right?
Right.
So that actually now with technology doesn't happen as much because statements are statements, but although statements can be doctored.
Yes, I saw them all the time. And the funny thing is some people wouldn't take the time to make sure like the balance on the prior bank statement didn't match the prior balance on the new bank statement. Like it would be just kind of really obvious red flags to me where I would just do those double checks and they didn't think of it. So yeah, don't alter documents.
Now with technology for years and years, you've been able, you have a good Adobe Premiere software, you could doctor a W-2 and that's why lenders are constantly doing checks behind the scenes that you don't even know about, because hopefully we're catching these things. But like you mentioned, several of the bad actors were originators themselves, which is scary. But unfortunately, that's what happens. So I guess if you're listening to this, because there's some people that don't mean to commit fraud because they don't understand.
Mm-hmm.
If the lender is leading you to put something on the file or to do something, you're just thinking, well, they're the professional. I guess if it's really going to be an investment, but they're telling me to call it a primary, I mean, okay. People don't, I think there's a handful of percentage of people that don't realize what they're getting looped into because it's just naive. They don't do this every day. So if something sounds incorrect, and if you're having the lender, the loan officer that you're dealing with, who's going to benefit from commission, that's why they're going to get a % commission based on your sales. So they're unfortunately got some motivation to do something and kind of go out of the gray area. But if you've made a loan application and something doesn't sound right, and you're like, wait a minute, but that's not the truth, then you need to kick that lender to the curb and go get a second opinion, because Jen, let's talk about the prosecution. I mean, in the fraud cases, what % of the time did things get prosecuted and the government won? And what's the repercussion? What kind of jail time and stuff like that did people get?
So the FBI would not report back to us on what the outcome was of all of the prosecutions. We do know that they were prosecuting and they would follow up with us on additional investigation to the reports that we would produce. But jail times did range from 2 to 99 years for committing mortgage fraud. So, and the fines are incredibly hefty. So definitely, like you said, make sure you're working with a loan officer you trust. I mean, I can say that you and myself and anyone at Legacy, we would not commit mortgage fraud just on the sheer, we're great people and we wouldn't want to do that alone. But on top of that, our files are audited. So we have third-party audits of our files. So we can't commit mortgage fraud, but there are shady lenders out there whose files aren't getting audited and they might be doing fraud and you don't know it. So work with someone you trust. Trust your realtor's recommendation.
Yeah, if it's a company that you've never heard for and you can't Google and really find them and there's not reviews, and if it does, that's something to be suspicious of. But fraud does not discriminate. It is with small companies, medium-sized companies, large companies. Sometimes the larger companies are too big to fail and there's too many hands not knowing what the other hand is doing. And they're like, oh, this slipped through the cracks. So what %, and again, I'm asking you, I know this was years ago, but if you could guess, what % were loans that were originated in a small company versus a big company? Do you even remember?
I do, yeah. And then this is a guesstimate, but roughly 70% came from those big banks, which is nuts, right? So Countrywide Home Loans that was absorbed by Bank of America, they committed so much. I knew if I had a loan with Countrywide, I was going to find fraud. There was always fraud with Countrywide. Wachovia that got absorbed by Wells Fargo, Chase, all the big players had tons of fraud because the loan officers, they're less typically a loan officer that works for a big bank is usually a little less educated, a little bit more like a sales rep than really a loan officer. So they probably didn't know what they were doing, or they didn't know the repercussions as much as a loan officer like us. It's a bit more, you have to be pretty educated to work at Legacy and licensed and experienced.
Seasoned, yeah, for sure. Well, that is all super interesting. I want to kind of end with something that right now in this, a lot of income fraud and straw buyers was happening back in '08 with the Fast and Easy program, stated income, stated asset. I mean, I just can remember all these names of like, you could literally be breathing and get a loan. It was ridiculous. Now what I'm seeing a lot of is occupancy fraud, because there's a big disparity between prices, closing costs and interest rates on investment property and second homes, vacation homes versus primary. And this has always been there. Like, there's always been a difference in the pricing, but I just have seen a lot more of it. Well, I haven't seen it, but I've heard that that's like the number one focus of Fannie Mae and Freddie Mac right now that governs these, and NFHA. So talk a little bit about, because I'm sure you dealt with occupancy fraud as well. Like, tell us what that is and what that means. And
yeah, we dealt with a ton of occupancy fraud. So someone buys a home, claims it's going to be their primary residence so they can save money at closing, maybe get a little bit better of an interest rate, but they don't move in. Maybe they rent it out, or maybe the parents bought the house saying it was going to be for them, but the kid moves in, right? So there's all sorts of different types of occupancy fraud. But the way we would find it is we'd get a file, and I always had to look into occupancy. So I'd find out afterwards, did you actually move in? And the ways we would find out would be, looking at utility bills, looking at where they could have lived previously, interviewed the place maybe that they rented before, interview the landlord to find out, are they still living there? Did they continue living there? Did they move out? Right. So there's lots of ways. Did they file a homestead exemption with the county? So there are all these ways that we would look into whether they did actually occupy the home within 60 days of closing, which is the requirement for a primary residence. And it was very common to find occupancy fraud. And one of the most common ones was a bit innocent, because it would be parents buying a house for the child that they didn't plan to live in, but they bought it as a primary. And so they could qualify, but then they couldn't afford if the kiddo didn't pay the mortgage, couldn't afford to it, they couldn't afford to pay their mortgage and their kiddo's house, right? That was a very common one. And my heart would go out to them when I'd interview them, because they had the best intentions, but they still committed mortgage fraud. And maybe the loan officer said it was no big deal.
That when you're a parent buying for a child, it's an investment property. You're not going to live there as your primary. So some of the red flags we see and that we look for, that we super investigate, is, when, let's say someone is buying a new primary and the house is less expensive than where they live, which sometimes can happen when you move to the burbs, like I get it, but then you're like, okay, it's in the next neighborhood, or it's a mile away. They're not, there's no reason. Like, why would you be downsizing? You're 35 years old. Mostly people are upgrading, right? Like, it makes sense to downsize when you're older, right? Your kids are going to college. So there's red flags that we see. So I always preface it with clients when I start asking that question. I'm like, hey, I just want to let you know, please understand I'm asking you these questions because we need to be exactly sure what the intent is for the occupancy. And I've had to put the kibosh on some borrowers that and especially since we're seeing an influx of people from other states. Oh my gosh, it is. I'm sure you're hearing the same thing. Like, I'm hearing all kinds of, well, I could occupy whatever you tell me I have to do. I'll do it. I'm like, no.
Yeah. What are your intentions? We got to know the story.
I don't think we're going to be able to help you, like, whatever the true nature of that property is going to be is what you need to tell the lender. And unfortunately, there's clients that they hear no enough, or they're probably not getting what they want, and they're learning how to manipulate the system. So I just want to encourage, if those people happen to be listening to this or watching, do not commit mortgage fraud. It is not worth it. And the lenders right now, and in fact, our CEO, Don, told us you probably got the memo that like, it is so rampant right now that the lender's radar is so on, like they're looking for any reason to audit a file right now because of that reason.
Yep. I get it. They're trying to avoid another 2008 crash, and I get it.
Yeah.
It was a miserable time.
Yeah, for sure. Well, I really appreciate Jenn. I mean, I've just learned so much about your fascinating past. But so tell me lastly, just thanks again for coming on. Going was just kind of a natural transition that you like taught yourself so much about mortgage. You're like, okay, I'm going to be a loan officer. Like, what made you leave that to go to this?
So I left it initially to have a couple kiddos. I wanted to stay at home with them until they were 2. So I stayed home for 4 years, got both my kids to the youngest to 2 years old. I was like, okay, I'm willing to do daycare now. I miss work and I loved mortgage. Let me switch over to being a loan officer, because as much fun as mortgage fraud was, it was a bit sad because I'm getting people in trouble. That it was not, the investigating part was fun, but I was calling people that were, upset, losing their home. And I thought, well, what if I could take this knowledge and instead help people get into a home the right way, super educated on it, definitely can afford the mortgage payment. And so I took that approach, and I'm so happy I did. Being a loan officer is the coolest job I can imagine on the planet. Love it. And all of our home buyers are so happy because you're walking them through it and educating them. So that was the reason I switched over to being a loan officer.
Yeah, that's awesome. Well, you've got a lot of great skills, and you're just a great asset for us. So, but thank you for sharing this information. I just, how not to commit mortgage fraud. Like, it really is a big deal. And sometimes it's, like I said, it's by accident. You think it's kind of if there's ever even such a thing as a white lie, like, oh, I'm just going to tell them this. Well, no, that's not good. Don't do it. And, if you hear a friend that's going to do it too, tell them not to do it. It is really a big, serious deal. So I've got I've got some resources in the notes of this, whether it's video or podcast, just some extra resources for you, how to contact us, some more videos that you can watch. But thank you, Jenn, for being on here and for giving us your knowledge. And we'll talk to you on the next episode. Thanks.
Thanks for having me. Bye-bye.